Hey guys, and here it is, the long-awaited Netflix earnings report. Look, the markets are fixing to close in the next 20 minutes. I'm trying to record this fast to kind of let you know how the Netflix price may be reacting after hours. So first, we're going to review the Netflix bull case. But guys, many does not realize how crucial this earnings report is, because if Netflix does go higher, all the FANG stocks are going to move higher, and that does mean that we are moving to all-time highs in the markets. However, we're going to analyze both the bull and the bear case here. So here it is, guys. The first crazy question: what does UNH and Humana have to do with Netflix price possibly moving higher? And you are thinking, like, what kind of question is this? It's reporting earnings in 25 minutes, and you're talking about UNH and Humana. Come on, buddy, what's going on with you? Look, guys, here's the deal. I'm just trying to teach you a few things as we go along for this. Here's the price of Humana in July. Do you see this nice, solid uptrend? Yes. What was happening in July? Everybody was expecting the interest rates to go higher. When interest rates are expected to move higher, institutional investors prefer to take their money out of growth stocks and place them into stuff like healthcare, utilities, and so on. So the goal of a trader really is to identify where the big money is flowing. So for us, individual traders, we can figure that out. We can put some powerful trades together. Let's take a look further. Just as the market was crashing, right? UNH in October, check this out. This was actually the only sector that was not selling off. So here's top one, here's top two, here's top three. We were actually alerting our subscribers at the time, saying, look, healthcare sector is about to unwind and it is about to go lower. Because in some of the videos we posted in September, we predicted that we are going to transition from this high interest environment expectation to a lower interest rate environment and possibly some stimulus. Now, at the time, nobody wanted to agree, so we typically are just a little bit a step ahead of what's actually about to take place, guys. So stay with me with this UNH and Humana analogy. Bottom line is this: UNH was moving higher while the rest of the market was dropping. It was actually setting all-time highs. Check this out, guys. 272.5 while the markets were crashing in October and December. Now, we said, look, this is the triple top. By the way, if you take a closer look, and some stocks right now in the market highly resemble this chart. So the question is, what happens next, right? If we can find some similar charts, we can make some killer trades here. Guys, here's Humana. Same sector, right? Healthcare. Here's Humana. 1, 2, 3, 4 tops in a row. The question is, where are these stocks today? And the answer is this: UNH today hitting the low of 218.43. Guys, it was just hitting all-time highs while the market was dropping. Check this out. This was the time we were saying, hey, it's stopping, it's stopping. It's time to get on the put side on this thing. And of course, slightly prematurely, the stock was trading at 270, 280 level. We made that alert to our subscribers. Shortly after that, stock bounced to 290, and now it is at 218. Guys, charts don't lie. The importance of this is institutions. Check this volume out right here, guys. Look at all these red bars right here. They are taking money out of this thing like crazy. Why are they taking money out of the top sector, which was the top sector just a few months ago? Well, because they're taking money out of this sector because of the lower interest rate expectation environment. They're expecting this lower interest rate environment is here to stay. So they're taking money out of this. The question is, where on earth is the money going to go then? So to draw and conclude the analogy, Humana. I just showed you a chart where it was at 326, 330. Set a high of 350. Boom. We predicted the drop in Humana. Sometimes we predict this drop just slightly prematurely, but charts don't lie, guys. Bottom line, if you haven't taken the chart divergence course, click the link below, take advantage so you won't miss some of the crazy reversals, some top sectors. Because look, if you just study the trend, guys, the trend is not going to make you any money. Bottom line, look at this. Look at this beautiful chart all the way till here. So everybody was saying what? Well, the healthcare sector is awesome. I mean, it's going to move higher. Well, we're saying it's about to reverse and go lower. So we're noticing some of these things developing in some stocks. But again, the point of the deal here is this. They're taking money out of healthcare sector because of the expectations of lower interest rate environment here to stay. Which stocks benefit during the lower interest rate environment? And the answer is the FANG stocks, your technology stocks, growth stocks. What is the number one growth stock that has been over the last 5, 6 years. Guys, it's Netflix. Many of you may not realize if Netflix never did the stock split, it would be trading right now higher than Amazon at $2,400. Guys, Amazon is 1,800, right? BKNG is like 1,800, 1,900. Guys, this stock has had the highest appreciation among all the stocks. It looks like it's at 350, but again, if it didn't do the stock split, it would be at $2,500 right now, which would smoke even Amazon. Right, so here's the deal. Expectations of lower interest rate environment is a positive for growth stocks. So shift from value stocks to growth stocks again is in progress. So therefore, we could easily see those funds go into Netflix or Netflix-like stocks. Just making this observation does not guarantee that all of a sudden they're going to sell all the healthcare stocks and put all the money in Netflix. No, but it's all contingent upon a few other things we're going to take a closer look in just a sec. Now, here's the thing. We actually predicted the drop in Humana earlier this morning. So if you're not subscribed to the 13 Market Moves subscription daily, guys, check this out because this was an awesome trade. Guys, indeed, this was a crazy trade because we specifically said this. Check it out. Take a look at UNH, which is healthcare, right? So healthcare, super bearish chart on UNH, and you may be thinking, well, geez, look at this thing. Leonard, it's probably too late to short UNH, don't you think? I mean, look, from 285 all the way to 225. Yes, I agree. If we take a closer look here, I mean, clearly the bigger move is overdone already. The next level that it could drop to, however, is this 210 level, right, set up by the prior support right here. Last time it dropped here to the 210 level, it bounced, creating the double bottom right here last year. However, this right here, guys, we cannot ignore this. I mean, look at these huge volumes. Look how many people are taking the money out of this thing, and I'm not sure if we're done here. In other words, I don't think this thing is going to move substantially higher and sustain the move higher until we hit this 210 level. So there is a trade that we are considering in UNH because we are thinking that looking at the accumulation, there's plenty more people that could come in and take the money out of this stock. And so, surprise, surprise, it is up on low volume per market, hitting this level of 236. So this could be a good trade right here, guys. That is probably my favorite for the day, is this UNH. If it moves higher, especially to like 238, 240 level, you've got a probability it could actually drop all the way to 210 if the reversal comes in. Now, just because we're thinking it can drop all the way to 210, it does not necessarily mean you should be buying like 215 puts, guys, okay? The strategy is such, the VIX remains super low. You should be buying calls in the money or near the money. So in this case, if it opens, let's say at 238, then buy 240 puts, buy 235 puts, but please do not go and buy the 220 puts. Yes, they're going to be very, very cheaply priced, but it does not mean that those puts will make the money, guys. So in the money, near the money puts on UNH after a pop higher. And now, where's the stock? The stock is at just actually hit a few minutes ago, $215, okay? That is an amazing $23 drop. Guys, the money, some crazy money to be made on shorting some of these things. So here's the deal. Point number 2. Why would some analysts upgrade Netflix stocks to a buy rating and lift the price targets right before the earnings announcement? Because they bought a bunch of Netflix shares and they're planning on buying more. And if that is the case, that by itself could slow down the drop in the very least likely outcome. Okay, point number 3. If the fears of competition that you have probably heard all over the news, oh my God, now these guys are doing, this streaming. These guys now, the Disney is doing it at a lower price and all that stuff. Guys, let me say something about this. If institutional investors were really concerned, we would see it on the chart. Now, we saw that they were concerned for just a couple of days, slightly high volume, but we're not showing that they are crazily concerned over all this extra competition that Netflix is already facing and about to face even more. Otherwise, we could have seen a huge sell-off before going into the earnings announcement, which did not happen. We just saw a huge spike lower and a huge bounce back pretty much within the last 48 hours. So the reaction to Disney announcement was such that, yeah, it was actually rather dull. So they bought the dip around 342, 343. This is how it exactly looked in the chart. So the stock went from 369 all the way down to 342, 343. Boom, double bottom, stock bounce. Currently trading at 362 at the moment I'm recording this video. Now, Netflix options volume today, guys, also leaning more towards the bull side. If you calculate, and look, guys, this is just a rough approximation. All I'm doing is just adding the volume for today, all the contracts on the bull side, basically on the call side, right? And I'm taking these strike prices, kind of like beginning right here, 350 and higher, all the way to like 400, 420. So there's about 90,000 contracts on the call side that were purchased today on Netflix, and there's about 70,000 contracts that were purchased on the bull side. So right now, if we look at the call to put ratio, it's leaning towards the bull side in favor of the bulls. Now, guys, let's talk a little bit, at least a little bit, about the bear case. I know there's some bears out there that are just dying to short Netflix. So let's take a look at some of the reasons why this may actually be not such a bad idea. So even though Netflix beat the subscribers number last earnings quarter, it failed to make a big move despite the fact that the beat was rather significant. So, but it certainly did raise analyst expectations for this quarter. So guys, let me tell you, it's not a good setup with expectations for something that are running extremely high. Definitely in most of the cases, it leads to a failure and a reversal in the pricing action. So the number needs to be absolutely amazing in the next half an hour when the announcement comes out to have any element of surprise. Now, analysts are already going to be scrutinizing, institutional investors are going to be scrutinizing everything under a magnifying glass because now there's just so much more pressure on the stock with all the competition coming. Now, let's take a look at the chart. Here's what the chart is telling, guys. There's definite divergence developing. There's multiple top formation happening. Now, there's a couple of ways to look at this, right? On one way, we can look at this as a bullish development, kind of like a flag formation, right? Longer time frame flag formation, I wish the stock could easily break out. So the breakout is going to happen either way, and it is going to happen clearly with the catalyst being the earnings today after hours. So the question is, will it hit the resistance level and actually break above that? So the key levels to watch in the stock, guys, are these. And we've covered that in the last few videos. We will nail the specific moves in Netflix. Now, this one, the chart is not really pointing to any specifics. So we're actually staying neutral. If you watch most of our videos, we actually do not trade stocks and we don't buy options them right before the earnings announcement. We typically wait for the reaction because that produces a much higher probability trade. So with that said, however, we do observe some divergence on our side. When the stock does make the moves lower, they do happen on much higher sell side volume rather than when the stock tries to go a little bit higher. We do see some bearish divergence, bearish reversal candles developing here. And here's the last 2 days. So this was the reaction to the Disney announcement, rather muted, right? What's the $20, $30 drop for Netflix? That's nothing. And plus, it already managed to pretty much cover all these losses it has made in the last 48 hours. But the significance is it's right against this blue line, and we know just about that blue line, about 377, 380 is a huge resistance level. So it's really going to take some really powerful news, and more importantly, the announcement from what the CEO is actually going to say. So bearish top formation on. There's different ways to look at it. Again, there's actually a resemblance of a miniature Head and Shoulders as well. There is a MACD bearish crossover, and even though the stock is up, right? I know some guys, you guys just looking at the fact that the market's in the green, everything is in the green, that does not really tell you what's about to happen next. So sometimes just observing the price action is not the best thing. As the price is actually moving higher, guess what? This accumulation distribution is actually showing us that they're selling. They're actually selling the shares while the price is moving higher. So here's what we've got on the weekly chart. Same divergence observed, same head and shoulders pattern observed here. Stock selling off on higher volume, moving higher on lower volume. That is a bearish thing. We're about to have a crossover right here on the MACD, and accumulation distribution showing signs of weakness here as well, but it's not all the way at the bottom. So the stock is not always sold by no means. So a huge move to the downside is coming. So here are the key takeaways on how to actually trade Netflix shares after the earnings announcement. So as indicated earlier, it could have already dropped like crazy based off the Disney, but the reaction has been rather muted, and they picked up the stock around 342, 343 level. So this is exactly what we expect after the announcement. Okay, regardless of whether the earnings are good, bad, whether this is Priger Goff is slowing down, whether it's exceptionally awesome, whatever, doesn't matter. Okay, what does matter is no matter what happens, it's going to drop to 342, 343 level, and then pay very close attention to the earnings call, because that is actually the fate of Netflix shares will be in the hands of the one and only man, and that is the CEO of Netflix, Reed Hastings. So if Reed, for some reason, decides to not make a big deal out of the rising competition, and he's got some pretty good forward-looking statements about future growth projections, then the stock will bounce from 342, 343. It will bounce higher by tomorrow, okay? And if he does acknowledge the severity of the competition, and he does say something to the extent like, well, possibly that's going to slow down our subscribers' growth, then, hey, guys, the stock is headed to 300, maybe even 290, okay? So the idea is this. What we don't know right now with a 100% certainty is the initial, what Reed Hastings is actually going to say about what Netflix is facing right now. And so we've clearly seen this lately when Diamond had some good things to say about JP Morgan, the stock went up. Okay, but then some other financials reported results and their CEOs didn't talk up their stocks and their reactions were not as good. So it's all about what Reed is going to say in this earnings call. So the initial reaction is not always the true reaction. So pay very close attention to this. Again, do not buy options before earnings. There's multiple reasons for that. I don't have time to cover all of them. But the bottom line is it puts you in a low probability position, because even if you can get the direction of the trade correctly, if you get the magnitude wrong, and in this case, there's just too many variables to specifically say what magnitude. And we've predicted correctly the magnitude of Netflix. You can check out all the videos we posted in the last year. We've actually nailed the magnitude of the moves precisely. Now, this is not one of these cases because, again, one thing that we do not know specifically is how Reed is going to react to what Disney has announced recently. So he can talk up the stock. He can be very conservative and say, yes, that is a problem. And depending on what is said on the earnings call, that is what is going to dictate when institutional investors are going to come in and buy this thing or not. So we've laid out the bull case. We've laid out the bear case. And as a word of caution, do not buy puts before, or do not buy calls before earnings announcement, because it's a low probability trade. It really pays, guys. It really pays to wait for the reaction first and trade Netflix with a much higher probability tomorrow. With that said, guys, if you're trying to learn more about trading options, click the link below. Take some of the free trading that we offer. Take advantage of some free information on our site, tradingoptionslive.com. Watch some of live trading videos we got. So check everything out so you can become a better trader. Guys, let's watch the show. It's about to start in the next 15 minutes. I'm going to try to upload this video, and I'll catch you guys in the next video. Have awesome trading tomorrow.